for joining this panel on sustainable finance in Africa, organized by AFRICARTA and Alassane, that we are doing events together for already quite some time, almost some years. We are delighted today to have two speakers, Stéphane Levescon, who is partner at Linklaters, and Laetitia Dubois, managing partner at Ecosys Advisory. We had announced the presence of Hugues Mandiba Madia, a Gabonese minister, but unfortunately he's not able to join. But we will try and talk a little bit, of course, about what Gabon is doing and their crucial role in renewable energy and sustainable finance in Africa, nevertheless. This panel will be an exchange, a discussion between the three of us and most specifically our two panelists. And when and if people are online, they can also ask questions in the chat room. I will post a message to say that I will collect questions in the chat room, and we'll have a good amount of time later for questions. Maybe first, some words of introduction about yourselves and your company. Laetitia, do you want to jump in and introduce yourself?
Sure, thanks, Olivia. Can you hear me well?
Yep.
Perfect. Sure. So Laetitia Dubois, managing partner at Ecosys Advisory, as you said. I have a background in investment banking dedicated to infrastructure projects in Africa, and I also worked as business developer for a renewable energy IPP in Africa. You want us to present the companies right now, or just us for now?
Sure. Yeah, sure. Go ahead.
Okay. So Ecosys Advisory, we are a financial advisory and investment boutique. We're based in Paris. So as I said, we have two practices. The first one is the financial advisory. So basically, we raise funds for green infrastructure projects, either debt or equity, either at corporate or asset level. We are geography agnostic, but let's say it like that, thanks to the partners' backgrounds, we have a strong focus on the African continent right now. And on the other hand, the investment practice, so my two partners are currently raising a 100 million euros debt fund in collaboration with the private equity fund Air Green. So the fund will be dedicated to small scale and medium scale renewable energy projects in Africa.
Yeah, thank you. And this is very, I think we can note that this is very innovative, especially in France, and not very many funds, even with large track record, have been doing this. So this is a new innovative initiative. Stéphane, do you want to say some words about yourself as well?
Sure, thanks, Olivia. So I'm Stéphane Levescon. I'm a English lawyer based in Paris. I'm technically also a French avocat, but I don't recommend getting any French law advice from me. I really practice English law. But all throughout my career, I've been doing energy and infrastructure development work and project financing. So a lot of kind of large scale, large capex project finance in lots of different places. Obviously, like most project finance lawyers, over time, my practice has evolved and become less oily and gassy and more sort of new economy, renewables, and so on. So yeah, I'm doing a lot of renewables projects around the world, all sorts of exotic places, Taiwan, Turkey, and Egypt, and so on. I've got lots of links to Africa, sort of personally and professionally, and I've worked on lots of very interesting projects, sort of all through my career, really, from hydropower in Mozambique to seaport in Nigeria, dry port in Egypt, airports in Cape Verde at the moment, refinery in Egypt, attempt at doing a coal power station in Botswana. Perhaps we'll come back to that as a theme. and more recently, renewables and hydrogen, with Egypt being a place that we're focused on that sector. So yeah, lots of interesting insights from my own sort of personal experience, professional experience, I would say. But as a firm, we've also done loads of other stuff that I'm not always involved in, but really big ticket projects like the Nacala mine and port project, some of the LNG work in Mozambique. So yeah, happy to talk about those sorts of experiences. From a personal perspective, also lots of interest, which maybe is not always overlapping with the professional side. My mother's lived in South Africa for 25 years, so I've got a pretty good understanding of some of the things going on down there. My wife's family are from Kenya. I was married in Mombasa, and my father-in-law is currently the diplomatic representative of the AKDN in Uganda. So I have a lot of interesting chats with him and get lots of insight that way through what they're doing in Uganda. So lots of different angles that I come at this from. But yeah, delighted to be here. On Linklaters, I expect most people are sort of familiar with we're a global law firm headquartered in London, present in we have 36 offices in 30 countries, and about 2,500 lawyers. Our strategy in Africa is quite interesting in that we really have three different means of covering Africa. One is from London, which tends to historically focus on the Anglophone parts of Africa. The other is Paris, as you'd expect, Francophone Africa. But I think we're quite unique also in having a very strong Africa-focused Lisbon office, which allows us to have a really, really, in-depth coverage of the Lusophone countries as well. And as many will know, we have a really good alliance with Weber Wenzel, obviously a leading firm in South Africa, which gives us the sort of Southern African angle too. So yeah, I would say Africa is a really interesting focus for our firm and many different practices within our firm.
Wonderful, thank you. I think what is really the specialty of our panel today is that we have two panelists who are in the real life of projects. Yeah, so you both have worked on so many of them that both what's working, what's not working, what projects are being talked about versus delivered. It's one of the big themes that we wanted to touch on together, because I think on the African continent there's sometimes a lot of communication on very large projects that sometimes take years or to materialize, and sometimes don't even materialize. Whereas both of you live through the reality of actually delivering projects. So it'd be interesting to see, of course, what are the different characteristics. I'm just for the participants listening into our panel, I'm just posting into the chat a little welcome message. If you open your chat, which you see at the bottom right of your screen with the dot and the options, you can post questions there as you go along, or any sort of intervention. Don't hesitate to do so. I will keep an eye on it, and we'll coordinate your questions with the panelists later on. So if you have anything that you want to share, please do so. When Alassane came to us and said, "Oh, I've thought about you guys to talk about sustainable finance in Africa," I must say that we went into quite some intense introspection of what is it that we're going to talk about, and we played with the concept, and we played a little bit around the views, because it's at the same time quite a wide topic, but it can be looked at from different angles. And we thought about what is sustainability, and what is it, for whom is it sustainable? Yeah, what makes a sustainable finance anywhere in the world, more particularly in Africa, for the discussion of today? Is it sustainable for the countries that that host the project, for the users, for the investors, for the bankers, for the advisors, for the lawyers. What does sustainable mean? Does it mean affordable? Does it mean with delivery, depending on the cost, with delivery of, either megawatt, if we're talking about energy, or water, or access, roads, any generic infrastructure, airports? Is it sustainable because on the long term, it is not impacting the environment either? So there are very many ways to understand and to discuss sustainable. I will start. I'm being asked if this session is recorded. Yes, it is. It is recorded, and we will post it as well on LinkedIn and share it later. So don't worry if you or your colleagues can't join as we speak. To plant the scene, and hang on, yeah, here we go. And starting because also from my day job, I've got a strong focus on renewable energy. We just wanted to share with you some data and statistics that we put together, which we think is quite thought-provoking and would help us also structure our discussion today. We focus on solar and wind. This is not, of course, the entire spectrum of the sustainable finance world. It's just one of them, but it's already one way of looking. What we have checked on and recorded is the real installation, so the number of gigawatts of solar energy installed on the African continent, and the distribution by geographies. So you can really see South Africa is really in a league of its own. I think it's sometimes very difficult to mix South Africa with the rest of the continent. It's been developing renewable energy, at least on a complete different scale than the other countries. And that is well known. But you can also see that Egypt, Morocco, Algeria are really very serious participants, and more so. I think probably, Stefan, you will talk about this later. We have in terms of wind, it is not dissimilar per se. Egypt comes third place. Morocco have been developing aggressively wind energy as well. Kenya, of course, is the well-known Lake Turkana, and you can see Ethiopia as a very interesting contender. In terms of who are the companies investing and developing projects, of course, you have a few very large and well-known foreign investors. Scatec, of course, is very involved in South Africa. Enel from Italy, Engie from France, Belgium, Axana, but they don't overshadow the picture. So it's not like foreign investors are taking a vast majority of gigawatt installed. It's quite some balance between foreign and local companies and strong large utilities. You run the exercise for wind. Foreign companies, they are similar, let's say. In terms of African continent-based companies, they are different. So this is also interesting because it gives us a wide panel. We will share these slides as well, and they will share them to everybody. This is now looking at the future. So project pipeline is what the project developers are working on, what they hope to deliver and connect to the grid in the next year to 5 years. one interesting thought on this statistic is the very dissimilar situation of West Africa versus East. So a lot of projects, you can see Ghana, for example, Nigeria, of course, is a big participant into this distribution. And the growth of North Africa. So you remember what we looked at the beginning, that South Africa was really overshadowing the number of megawatt realized so far, but you can see that North Africa is now taking over in terms of future developments. That was for solar and same for wind. Once again, similar picture, very, very different for West Africa. So you can tell that that West Africa was focusing more on solar than wind, but between North and Southern, the same sort of rebalancing. And on the right, the smaller participants, quite a nice diversity of countries. And less geographical concentration. So this was just to plant the scene. Let me stop sharing. Here we are. Right. So, Stefan, I think you were kind to tell us, to share a little bit of the, let's say, the background information upon which Gabon was also willing to participate into a discussion, because last September they hosted the Africa Climate Week, and they've been very leaders in carbon credits. Are you able to tell us more about this?
Yeah, it's not something I've been involved in personally, but it's definitely a very interesting area, and something that the Linklaters team, our sort of environmental team, really leading it, have been involved in. I think essentially, for people to understand what's going on there, the context obviously is that all over the world, countries have committed to net zero targets and other reduction targets as part of the Paris Agreement sort of framework, and of course that means that there need to be mitigation, reduction, offset, programs in all the different countries. But we all know there are many many parts of industry that are difficult to abate, and where we also need to look at sort of removals of carbon from the atmosphere in other ways. So that's things like reforestation, carbon capture and storage, those sorts of projects. And one of the things we've been working on, which I think is perhaps the topic that one of the topics that the minister was going to talk to us about, is these programs that effectively allow companies investing in other parts of the world to make investments in Africa that offset the carbon that they're generating elsewhere. So the idea being, essentially, I think that these particular NGOs who are working in this space, it's people like Vera and Gold Standard. They will do the sort of technical scrutiny work to set an objective standard for what is a verified carbon credit, and that will then enable. So it might be investing in some forestry land that would otherwise have been cut down, logging for export or whatever, and that will the saved carbon from doing that will be credited and used. So that means that a company can go and make an investment in Africa, which also leads to an improved environmental sustainable result for Africa in the saving of important forestry land. I suppose the question I have when I think about this is whether it's 100% net positive. I mean, to me, you know, is it necessarily the best thing for Africa that these sorts of schemes allow you know, new trade and industry and wealth generation to happen in Europe, say, and the result is that Africa gets more trees? You know, is that necessarily the thing that's going to drive you know, the things that Africa needs? But I think it's part of the, you know, it's part of the picture, and it's obviously an interesting development. So that I think in a nutshell is what we're talking about there.
Okay, wonderful. Thank you, Stephen. So we said, okay, what is sustainable, and for whom is it sustainable? I believe we came to the quick conclusion when we were preparing this panel together that a sustainable project has to be successful first, meaning it has to exist. So then I pass on to you, Laetitia, because you are working on very specifically design certain scale and characteristics of projects, because you believe that these will be successful. Can you tell us more and explain to us what you're working on and why you believe that these projects are better suited?
Sure. Thanks, Olivia. As a quick word of introduction, so as I said, we are launching this debt fund dedicated to small-scale renewable energy projects in Africa. And the reason why we launched and we decided to raise that fund is that because we see a market mismatch currently in Africa on the renewable energy side between a lot of appetite from the financiers for large-scale, utility-scale renewable energy projects versus only a few of them being materialized. Why do they have appetite, those financing institutions, such as the development finance institutions? They are the natural, let's say, like that, natural financiers of large infra projects, such as the power plants. But usually they do not have a magnifying glass, and they only focus on, let's say, 50 million tickets projects. But below, it's too costly for them to go on smaller tickets, or they can do smaller, but let's say they want to focus on large tickets, and so large scale projects. But on the other hand, there are not so many of such projects. Why? Because you have at the national levels sometimes weak power grids that cannot accommodate large renewable capacities. So imagine you have a national grid in Gambia of a bit more than 100 megawatts connected to the grid. So you cannot plug in a 100 megawatt solar plant on this grid. You won't be able to accommodate the renewable energy, which is by nature which cannot produce by nature during the full day, and only when solar is there. So you have an issue of a lot of financing institutions who really want to finance those major huge projects with utilities and authorities and governments backing the payment of the electricity, but in reality only a few projects on the ground. So we came to the conclusion that so for instance, to give an example, the World Bank a few years ago started their scaling solar programs. So they go to a country. The first, I think, one of the first was Senegal, and they give almost everything to the IPPs to bid. They give the land almost for free. They give the power purchase agreements, the legal framework. They negotiate the taxes. They negotiate everything on behalf of the IPPs. And so you just have to put a price and to have good credentials, obviously. Not everybody can participate. So those are the programs that the DFIs typically want to finance, but it's difficult to implement. So on the other hand, we see a lot of small and medium scale solar or renewable energy projects, often decentralized, so not connected to the grid, for instance, at the places of consumption and not distributed anywhere on the grid. But for those kind of projects, we see very few financing offers from the traditional financing institutions. As I said, they focus on very big projects, and it's difficult for them to go to below let's say $20 million per project. So this is where we find this market mismatch. We see on the small and medium scale project, we see a booming market on the commercial and industrial side. For instance, in the countries you mentioned in your introduction, Olivia, so Nigeria, Ghana, the DRC with the mining players, Kenya, Cameroon, or even Cote d'Ivoire. So there is an addressable market, a huge market. For instance, you are ArcelorMittal, you have a steel plant in Liberia. Your electricity bill is 30% of your OPEX. You suffer from power outage twice a day. Solar is a good solution for them, but they just need 5 to 6 megawatts, for instance. How do you finance that? Today, you don't have any solution. I mean, you have very few solutions. This is why we decided to tackle that market gap and start this fund with tickets of average 5, but able to go between 1 and 10 million.
Yeah, I was going to ask you what's a small project, but we're talking below 5 megawatts for sure.
Below 15
on average.
Yeah, below 15. The basic ratio is 1 mega 1 million euro. Yeah, say 1 mega $1 million. So easy calculation. If you have a 10 megawatt project, you're looking for 7 million debt roughly. And so that is typically the size we can do, but we can do below, way below. Yeah.
Interesting, very interesting. So you said, so these installations will be decentralized, so they have less, let's say, constraints, they put less constraints on the grid, and they also have less to rely on the grid and the grid investments and what the grid can take. What about PPAs? What about how you would then sell the electricity? Because on the large projects, we still have issues with the PPA. We are currently working to finance some solar plants, and absolutely everything is there except the PPA is not bankable, and and that is blocking the whole thing. So how do you innovate in your sale of electricity on these projects?
So we are not the developers ourselves. We will be the financiers. So our role will be to check if the PPA is bankable, as you said. The counterpart on the PPA is critical. So the industrial or the commercial player who will pay for the electricity, but also so the same issues apply to the PPA when you sell electricity to a CNA player, commercial and industrial player, or to a large national utility. You need to have your PPA as much as possible bankable. But so that's our role to check. But the thing is that I think now people are aware of what is a bankable PPA. It's not a nuclear weapon to build a bankable PPA. You have like 10 codes that you need to have on the contract, and the developers we're talking to they know their job and they know how to negotiate bankable PPAs with the termination clause, etc. That needs to be in place. I think that when you speak about a large utility scale project, what's usually complex is that in front of you have a utility, usually public company, publicly owned at least, and the payment capacities are always questioned by the lenders. When you have an ArcelorMittal or a Lafarge or any other industrial player that is able to put its corporate its holding corporate warranty on the PPA, it's a completely different story.
Yeah. And I think one thing I want to do is to send a recording of our panel to these guys. I know the head of our power trading at Rio Tinto. I want him to realize that we need them to really come to our projects now. Yeah, enough talking, a little bit more delivering, because indeed they would be perfect off-takers of these decentralized projects as well. But the link between the industrials and the project world is not yet really real enough. Yeah, there's not enough sort of deals being made still, probably. Well, is that something that you witness as well, or?
Yes, but our conviction is that financing is part of the solution. I was in a previous life in the shoes of the developers trying to sell electricity to CNI players, and most of the time the problem that, okay, we have a great project, the client say, yeah, your project is great, okay, how are you going to finance it? And you say, okay, so I might try to go to such DFI, so it will take 18 months. Are you ready to wait 18 months before we start the construction of your plant? If you talk to an industrial player, it will say, what? 18 months is not something I can consider. I have a day-to-day business to manage. My horizon is like 6 months maximum. So in our opinion, the financing is critical if you can accelerate that, and if you can offer a solution which the large DFIs do not offer currently. You can just unlock the projects that are stuck at the stage of people discussing with people but not committing to anything.
Yeah. Stefan, I see you burning to jump in.
Actually, do you mind if I ask a question to Laetitia? It's probably not the right thing.
No, definitely.
Because obviously, one of the obvious questions and classic problems is the currency, isn't it? So I wonder, do you have any sort of clever solutions for how to offer more local currency financing? Because you know, everyone talks about it, and it seems like something that, you know, that should be something the public lending can help with, but without sort of partnership with local financial institutions who aren't always there or aren't always in the market, it's quite actually difficult to see how you solve that. I mean, I've seen, you know, you see, for example, programs with concessional lending to a local player, perhaps even a local, you know, different types of local players, whether they're banks or NGOs or whatever they might be, with programs that then have small scale on lending. It wouldn't be as smooth as the fund, you know, solution that you're proposing, but that's things that have been proposed. But then because the lending's in hard currency, actually it's concessional, but it's still not necessarily that cheap. And actually there's a limited number of businesses that really have a use for foreign currency, you know, for hard currency financing, because, you know, their revenue is not in hard currency. So yeah, really interested if you've given thought to that point.
Yeah, that's a major issue, obviously. Let's say if you work in CFA zone, the issue is solved, partially solved.
Yeah.
So that's at least, I mean, that's the first answer, but that doesn't answer to to the whole continent issues. But for the rest, obviously, you usually have, I mean, I don't know, if you sign with ArcelorMittal, you might be able to negotiate a PPA in USD. But if you sign with a local industrial player or any kind, let's say in Nigeria, most probably you have a PPA in Naira. And so that's true. Your payments are in Naira, but your capex is in dollars because you're purchasing panels and inverters, and that is paid in dollars. So the debt offers will most of the time be in hard currencies. Agreed with you, but you need hard currencies to pay your capex. Then the issue is how do you repay your debt over the time, because you paid in Naira and Naira depreciates. Two solutions. First is, yes, I agree with you. It is the role of large DFIs to provide hedging solutions for those hard currency financing, or to allow the debt to be done in Naira, for instance. But I think that doesn't solve all the problems. And another solution would be to negotiate PPAs that are basically indexed to the local inflation, so the price can be revised over the time as the Naira increase, the Naira depreciates and inflates. I mean, there is inflation in the country, and if you consider that the inflation is correlated to the devaluation of the money, basically you partially covered against that risk of devaluation of the money. So that's the solution we propose to the clients, is to negotiate PPAs that are able to for which the price is able to move as with the inflation in local currency. It goes for cedi or Naira, for instance, and you have other. Well, I mean, cedi or Naira are very volatile, but you have other local currencies which are far less than those. Talking about the rand or any other currency pegged to the rand, such as Namibian dollars or things like that. So it's a solution that can be implemented for countries where there is a very strong volatility of the money. But that's not the magic bullet, huh? I understand.
No, I don't think there is one. Okay, coming back on the PPA point, I agree. I mean, obviously, it's our job as project finance professionals is obviously to analyze all of these PPA bankability issues, and it always is obviously a big driver of large scale capex projects. But I do think sometimes people overthink it a little bit, and I risk allocation is one of the issues, isn't it? And I think we probably need to accept that more risk is going to have to be taken by the private sector financiers, sort of at a macro level. And you can take the view that really what matters is that the person buying the power needs the power and that they can afford to pay for it, really. And actually, if you have those two things, you've probably solved 90% of the problems that are likely to arise. And actually after that, sweating over the exact definition of force majeure in your contract maybe is not, is actually limited, returns on that time, if you know what I mean. So I would definitely say that over the last 10 years or so, PPAs in emerging markets have popped up in different places that have had less, have not always had the sort of traditional, perfect commercial bank risk allocation, and yet, people have got comfortable with them in a variety of ways in different places. So, we should continue to be creative about that and not expect every single risk to be taken off the table, I think.
There is one thing that I'm super curious about. That for large infrastructures, so particularly in France, we've done that, for now over 50 years. We've developed this concept of private-public partnership. So almost like bringing the best of both and working together and making sure that infrastructures are delivered for the public with the support of some public administration or structures, but with the private thinking and the private financing. I haven't seen, but let me know, of course, what you have seen. Have you seen such sort of commingle projects in Africa? Because on the PPA, you either hear the solution of private versus public utility PPA. So one is still not bankable, the other one is still not coming. Why can't we bring this private-public cooperation more?
I'm not sure there's that big a difference. I mean, it might be more on semantics because you can achieve the same goals. A PPP, public-private partnership. Really, it's just an allocation of risk, isn't it, between the state and the private investor? And one way to do that is through a PPP law or a PPP contract. In some countries, but it's really not hugely dissimilar to a concession type agreement, which again is not hugely dissimilar to a PPA in the sense that the PPA may then include the regime for who bears different risks, whether it be change in law or force majeure or in what circumstances the project can be bought back by the public sector or compensation paid, etc. So I'm not sure. I think it's sort of a sliding scale of types of project, and they get called a range of different things, but I'm not sure the difference is that crucial. I don't know.
Okay. Laetitia, I have a question for you. So do you see still financing in groups like yourself cooperating with DFIs, or do you see what you do sort of completely different from what they do or the focus they have for Africa?
Good question. The limited partners, the LPs of the funds are part of them are DFIs, meaning they know the issue, they know the market mismatch, but it's too costly for them to go to zoom on the market and have interest and be interested in small scale projects. So they are happy actually to see us coming and saying, okay, guys, invest in the funds and we do the job. So we have commercial banks, French commercial banks. We have wealth African individuals, but we also have DFIs, such as the EIB, which communicated officially, so I can announce it. So it's not at all a story of being against them. Not at all. On the contrary, it's to help them go below the historical thresholds. And we're ready to do that for them. But then it's an indirect investment because they cannot do such tickets directly right now.
So they finance you to finance the project, in effect. Okay.
They finance the funds, the debt fund, The 100
and do they have then in terms of impact they've had or impact that they wish to have, going back to our theme of sustainable, beyond financing or helping to finance projects, do they print their mark on how sustainable projects should be and in the end really are? Where do you see their role in that realm?
Yes, of course they do. How to say it? The thing that any project in Africa in the renewable space need to follow is the IFC performance standards in terms of environmental and social impact. So obviously they need us to check that those standards are met in all the projects we will finance. So it doesn't mean, it's not because they don't invest directly that their level of expectation decreases at all. No.
Okay. And you see a true impact. I'm always wondering, I've been through many times the pain of closing transactions with international agencies and DFIs on board. I think we all have anecdotes, painful anecdotes. With my business partner, we finance a wind park in Mongolia, and we had to open a school that was not needed, that was not required, that was not fitting the village, but we still had to do it. So it was completely surreal, and it took a lot of time and energy away from the financial close of the project just to focus on the school. I'm very curious to know from other practitioners what are really the impact of such, let's say, philosophy of investment and philosophy of development on the ground. And if we should continue to work like that and stick to these ideas, and because they are bearing some good fruits, or whether now there is a complete new generation of financiers and project developers that can think about sustainability in a different way.
Stefan, you want to answer?
Yeah, I mean, I don't think we should undermine, you know, the good work that the DFIs are doing. I mean, you know, I think it's hugely important that, you know, the standards they set, you know, from all sorts of angles. You know, somebody needs to set the criteria to scrutinize, you know, sort of greenwashing, and there needs to be, you know, clarity on what we're all trying to achieve. And I think, yes, the DFIs, through the process they run, you know, I mean, broadly what it means is, you know, you're screening projects and categorizing them. You're then running, you know, consultation processes to understand, you know, what the negative impacts are. You're setting targets for how to mitigate some of the worst, you know, impacts of the project, and ensuring that people are treated fairly and that standards are upheld. And I think all of that is good. You know, it's holding the industry to a higher standard. Now, obviously, it's also limiting because, you know, the mandate of these organizations, you know, it requires that they apply those standards, and you know, I guess we all know that not every person who's interested in financing projects in Africa necessarily applies the same standards. You know, people have different views on that. I mean, if you really step back, and as you started, Olivia, at the beginning of the talk about you know, what do we mean by sustainable finance, and in my sort of simplistic brain, I sort of, you know, I distinguish, you know, sort of mitigation versus adaptation. You know, there's kind of the two big areas, and you know, mitigation would be, you know, doing wonderful projects that are very green and empower women and improve, you know, water cleanliness and all of those great things, you know, whatever it might be. There's lots of different angles. Adaptation, on one level, anything that is investment in Africa that makes people wealthier and produces, you know, infrastructure and builds capacity, and, you know, creates the ability to sustain you know, economic activity is, for me, an adaptation type of sustainable finance. Right? So I don't think we should, you know, necessarily be hung up on it being a terrible thing if someone comes in and doesn't follow the IFC performance standards. But at the same time, I don't think we should be saying to the DFIs, oh, you know, stop being so fussy about your standards. You know, I think, you know, it's important also that you know, we have that as a benchmark to measure ourselves against.
Right. Okay.
I hope that was suitably diplomatic.
Yeah, very good, very good. Yeah, we knew that in this panel we were going to ask some questions that are not always.
We've all had some, you know, lots of anecdotal. My favorite story about ESG is working on projects one particular project in Russia where there were issues to do with salmon migration, you know, swimming up the river, and inspections of the project, you know, led to the conclusion that they needed to they were sort of having, bridges were collapsing, and they needed to improve the situation for the salmon. So these giant pipes were placed sort of through the kind of rubble under where bridges had collapsed and so on, to create a smooth path. And the next time I think it was the lender's environmental advisor did a site visit, everything looked wonderful. There was a pipeline, all the fish swimming through it beautifully, but the local contractors had put a big net over the top of the pipe, and were basically collecting the salmon in a fishing net and taking it off for lunch. So it sort of, you know, sort of defeated the purpose of the I don't know. It's just it's as you say, it's easy to get carried away with the theory and forget about what it means on the ground, actually.
And this is Stefan, a great transition to come to your focus as well, because if we we have been thinking together with Laetitia of this concept of too big to succeed in terms of project size. On the continent, you, on the other hand, have been working now for a lot of years on very large successes, very large realizations.
Not all successes, but yeah, very large. Yeah.
Very large, nevertheless. Can you take us through a sort of a cartography of projects you've been working on and success stories that you've been involved with?
Sure. I'm trying to think how best to do this without going into too much detail, but yeah, it's a variety of things. I mean, take a fairly recent success that I was involved in financing, which was the Lekki port in Nigeria. That perhaps is an example of one that didn't have the same constraints, because a large part of the financing, well, all of the senior debt financing came from Chinese banks, and so obviously that one was the financing solution came relatively easily there, but still it took a very long time to develop and have the right the right risk allocation in the project. So that's one example. Other cases, an unsuccessful case I worked on for a long time, the Morapule B coal plant in Botswana, which I think is interesting for a couple of reasons. One was, I think it probably did fall into that too big to succeed bucket, because the political sort of risk involved in approving a project of that size, I think ultimately was sort of too great. It was too big a chunk, and the consequences of getting it wrong, politically and economically were severe. So in the end, that sort of got very close to financial close and didn't succeed. And I think it's also interesting to think, as we were doing that, this was going back a few years, there was very much a feeling that it's sort of now or never with that project, because already debt capacity for coal power plants was disappearing, and I think now has almost completely disappeared, unless you again go to China. But that for me is interesting. I think there's a big sort of philosophical sort of moral question there as to whether it's really fair that Africa that creates whatever 4% of the world's pollution, and is the most exposed to climate change of all the continents, shouldn't be allowed to should have financing cut off for doing those sorts of projects, which would very quickly and efficiently give access to power to a lot of people and create other opportunities and stuff. So I think perhaps that's a whole kind of moral quagmire that I won't get into. But that's one question, one issue that was the relevant there.
But currently, you see that all financing to coal is completely stopped. You can't get into financial close for any coal plants. I
think so. I mean, we haven't tested it recently. I mean, everyone seems to be quite squeamish about it. I mean, I don't want to say definitively, because I think there are cases in developing countries where you've got a project that's clearly a sort of essential and there's no other way of generating power, and it's using sort of ultra supercritical technology that's the cleanest it can be. Maybe there's a way through that, but it's very, very hard and almost sort of ideologically closed off, even before you get into the debate. So yeah, I think it's very unlikely to see anyone financing coal. But even even oil and gas generally, I mean, perhaps it's a slightly extreme example, but at the biggest end of the spectrum, the EPOP pipeline, looks like an incredibly difficult project to finance, and a large part of that is the perception of the sort of the dirty nature of putting a gas pipeline through a nature reserve.
Another difficult, interesting topic is on the hydro, because hydro has been a very large generator of electricity in Africa. But of course, with maybe the effect of climate change and lower levels of water, a lot of these hydro power plants are not going to produce as much in the future. So they are not, let's say, sustainable anymore. And therefore, if you cut completely out coal, and I think nuclear is not quite really a realistic topic, it lives with wind, solar, and biomass to cover the growing needs of electricity. How realistic is that?
Yeah, I think I'm the wrong person to ask. Yeah, absolutely. Challenge, and yeah, it is. I think there is a very legitimate question. You know, if someone can quickly and easily build a coal plant and have access to coal, should that be something that gets stopped kind of in the boardroom of a Western bank?
And also, there's been a lot of changes and innovation in coal plant output. I mean, the coal plants that would be built today don't have the same characteristics as they had, of course, 40 years ago. Yeah. It's also something that is not often discussed in the media. We're very polarized on this topic.
No, that's right. That's right. I mean, obviously, there's also CCUS technologies and stuff, but I don't think that's also not realistic in an African context. Yeah, and so as you said, certainly not nuclear. We have enough trouble building those in England. So
as it is. And another question I have for you is, I think you've been involved a lot in these projects that we've seen in the geographic distribution in more the sort of North Africa, northern countries, and also Egypt. There's been recently some very big tenders, including in Morocco. But there is a bit of gossip or word on the market that maybe these big projects, particularly solar, are not going to be built because the tenders have run through, and then the price of power that has been won and obtained by those winning the tenders are not sustainable anymore. And therefore, maybe these projects are just going to be abandoned, which, given the amount of work that everybody in the industry put to organize these tenders, is sort of heartbreaking, but it might be a reality. How do you see that in the latest power prices moves?
Yeah, I can't claim to be an expert on that. I think perhaps Letitia is a better place to answer, but that's certainly an issue, and I would say certainly not an issue constrained to Africa. I mean, that we've seen that in lots of markets that, and especially with inflation, the levels it's at, and the tariffs that are granted on these tenders often don't include inflation, or they include it at a level that doesn't reflect the real cost or the real cost increases in terms of raw materials and transportation and so forth. So yeah, that absolutely, I suppose, is a risk. I guess if all the tenderers are in the same position and ultimately the assets required, then someone will have to sit down and hammer out a solution to that. I'm not sure I've got any real insight into that.
But and I also then wanted to ping pong to you, Letitia. What we also saw in the distribution of either gigawatt connected or in project is how different a situation we have in North Africa versus West, East, and then the topic of South Africa. But South Africa aside, maybe Namibia and neighboring country. How do you look at it in your strategy? Do you really have a different view depending on this quartile?
Yes, clearly. I mean, regarding the reasons why, I think everyone is aware, but they started before the others. They have the legal frameworks in place, which all the sub-Saharan African countries, they don't all have the legal frameworks in place to implement IPPs. But regarding financing more specifically, for instance, Morocco and even Tunisia and obviously Egypt, they have the capacities, their banks, their commercial banks have the capacities to do non-recourse project finance on infrastructure, power plant infrastructure. The banks in Mali, they don't have the capacities to offer project finance and asset finance for such power plant assets. So clearly we are focusing. I mean, our fund will focus on regions where there is a market and where we can be competitive versus those existing players that we actually very happy to see they exist. You go to Atijari Wafa in Morocco, they know how to do project finance. So we don't really have anything to do there. We won't be cost competitive. They know the market, they know how to do. So we want to tackle markets where there is no local offer from the commercial banks present locally. So obviously South Africa and Northern Africa, especially Morocco, because Tunisia is a bit less in advance that Morocco are not the main focus markets for us, obviously. Yes.
Okay. So you also bring, let's say, your know-how as well as a differentiator.
Know-how and actually you can find competitive financing with an Atijari Wafa in Morocco right now. So the idea is also that we might not be the most competitive offer if we enter the Moroccan market right now.
Yeah. I will ask you at the end, so I give you a bit of time to think about it in the background. I will ask you each, what is your favorite project you're working on at the moment that you believe that in 2023 or 24 will be like a big success? So think about it. You tell me whichever you want. Another topic is communication. I don't know if you agree that you notice that a lot of the international communication on sustainable projects in Africa are focused on these big ones that sometimes are too big to succeed and take a long time to come around, and therefore this focus on communication becomes a little bit of a disadvantage because people keep complaining that these projects are not connected yet or will never succeed. And on the other hand, there are many, many successes that we just don't hear about. What would be your view on that, and how can we improve communicating on the real successes? Laetitia, that will be really big part of the communication of Ecosys, yeah?
Yes. I agree with you. We mainly hear about the big projects, and also communication is critical because not only to say, hey, we guys, everyone is good and the project is good, etc., but just to give confidence to the rest of the market, saying, okay, it's possible. I'm thinking of the one of the first CNI projects, solar for CNI, that was a success in Western Africa, which is the Essakane mine, for which Total provided solar plus storage, if I'm not wrong, or only solar, a PPA to the mine of Essakane in Burkina. That gave a lot of confidence. So, okay, it's possible. It's possible to be a mining player, and it's possible to have a solar powered plant and a PPA over the life of mine. And it has been financed, and it has been built, and it's producing kilowatt hours. So communication is critical also for that, for the confidence it can give to other developers, other clients of developers that are keen to that are looking. I mean, all the industrials, they are looking at renewables from. I mean, they have fears like, okay, will there be power cuts because it only produces when there is solar? So is it really reliable? is it really less expensive than the grid? So I think communicating is also critical for that. Say, okay, your fears, they're, I mean, we can understand them, but we have an answer to all of them. So yes, so we will communicate on the first and the next closings, obviously. I'm happy to.
We need to work more with Alassane. I think Alassane personally and his team are doing a lot for this, so we need to continue to support him. Stefan, a question for you. When you interview students that come to a stagiaire, you know, who come to work for you, or juniors, are they queuing at your door to work with you on these projects? How do you convince them? What are the things, the topics that interest the young generation on the topics on the projects you work on, and what is
there's no
what's your
difficulty
extent with them?
getting no problem at all getting young people to work on African projects. It's I would say it's a very very popular. I mean, many of our stagiaires are Africans anyway, so that makes it even easier. Including Alassane, actually, who was a former one of those. But
okay.
a lot of our associates and our stagiaires, you know, they're originally born in Francophone Africa, so that's actually one of the strengths of our team, that we have not just people like me that sort of, you know, do this stuff all over the world, but people who really understand the market. So no, finding young people who want to help do sustainable finance in Africa is not the challenge.
Well, that's wonderful. It's a wonderful news, I think. Yeah. And through their eyes, what do you see? How has the overall landscape in the last, let's say, 10 years? You've been involved at least for 10 years, on the continent. How has it changed?
I mean, not as much as we would have liked, I suppose, is maybe one slightly pessimistic answer, isn't it? You know, I think for a long time we've identified the scale of the investment needed, and you know, put that into a figure per year, and the disappointing reality is that the numbers have not at all matched what we all think is required. So that's
in terms of volume of investment.
Volume of deals, and I think, you know, one of the ongoing problems is that, you know, and I think it links back to the point you both made, you know, that there are lots of investors that are looking for really great large scale projects, but there aren't very many great large scale projects, and so you end up not doing enough. And I think perhaps, yeah, what Letitia is doing is a, you know, very interesting part of the solution, I think, to that. Yeah, I'm not sure I have a better answer really in terms of.
No, but I think it's interesting to look at reality in the eyes. I think it's also what we want to discuss on this panel. It's not just you know, the generic ideas and wishful thinking that we hear on many conferences, but just looking at, okay, aside from that, what is the reality? What is it like to work on a project for more than 8 or 10 years sometimes and still don't see the financial close? Or it's sometimes several generations of team working on the same project.
I mean, for example, before I came back to Paris 4 years ago. Before that, I spent 5 years in Asia. I was working in Korea and advising Korean lenders going outbound, but also Korean developers, and certainly that was a huge problem for my Korean clients. You know, a number of times we attempted to advise, or we were advising for a number of years, Korean developers on you know, projects in West Africa, for example. I won't give specifics, but and you know, they had people flying over constantly. They had people living in the country for 2 years at a time and rotating their families, and yeah, I mean, I think ultimately they just were too impatient. They couldn't get their heads around the idea that they needed to do 10 years of development work on the ground before they could have a bankable contract and have something to build on. So yeah, that you know, it would be wonderful to find ways of moving faster. But I think as you made the point before, I think that, you know, doing that with very large scale projects is difficult, and perhaps one of the solutions is to start smaller and build capacity that way.
Yeah. Laetitia, I'm sure you also don't have issues finding stagiaires because your team is in France iconic, known for many years and very, very respected. But you also went through the challenge of raising money, which is how did obviously it was successful. So your pitch and your ideas and your angle on proposing these investments is really well received. Any specific conversations you've had with investors that have surprised you on their change of mentality? Like what has changed? What is changing? How to deploy financing in Africa?
Yes, thanks. Actually, I would like to give credit to my two partners because they were the ones who went through that process, because I'm more in charge of the advisory part. So they'd be in a better position than me to give insights on that and on the conversation they had with the lenders. I mean, the GFIs and the commercial banks and the people, the LPs that will invest in the funds. So obviously it was a longer story than what we expected, but that's that's the enthusiasm of the entrepreneur. You think you will achieve your business plan in 5 years and it takes 10, but yeah, in the end it was very, very good collaboration. As I said, it was really and it's not ended on, the fund is not closed yet, but in the coming weeks hopefully. We had a common understanding of the situation. So when we went pitching the funds to them, they said, okay, we know that we have an issue, we don't know how to tackle that market. So it was not so difficult because we agreed on the issue and on the problem and on the market gap. So we didn't teach them anything actually, obviously.
Okay, that's interesting. Yeah, you came at the right time also, which is also very important when you fundraise. You don't want to be too much of a pioneer because then you don't raise any money. And
yeah.
And how did they? Well, I know. So sorry to ask you because indeed you're not. It's the team on a larger definition, but I guess there was probably a lot of grilling on how you're going to find these projects, because if they're small and does it mean that you need to have in your team a lot of people on the ground? How do you link with the sourcing of projects?
Yeah, very good question. Yes, definitely. We need to have people on the ground, or not working directly for us, but bringing opportunities to us. We're gonna open an office in Abidjan in the coming month for the sourcing of. I mean, we have a pipeline which is almost ready to finance, but then we need to continue. So clearly, you do not invest from Paris with Parisian people in Africa. That's a nonsense. Yeah. And as I said, we're looking for obviously international companies that are active in Africa. Let's say Total, Voltalia, etc. But also and mostly local developers. In Nigeria, you have a lot of local developers, Nigerian, that are active in this sector. We can also look at mini grid projects that are also usually local developers. So yes, we need to be in Africa, definitely.
And hopefully Alassane will organize a conference there. I'm not sure if that's in the pipe. I'm sure that he's asking, the community for support and financial support, but maybe that's something that we should all look at together to put local developers in touch with all these new sources of financing. I guess that would be very helpful. We see that in countries also in Central Europe and Eastern Europe, sometimes just a one-day conference where everybody is, it can be very, very efficient in networking. So Alassane, if that's in your pipeline of projects, I think you can talk to the community about it. Yeah. So I haven't received any question from the participant. Either they're too shy, or they need to have another coffee, or they don't dare to ask, or they maybe will be in touch with you both later and want to ask it privately. Anybody on this webinar?
Happy to ask a question, if I may.
Sure.
Hi, my name is AFRICARTA. I work for Boston Consulting Group. I'm very interested to hear what's different about bringing up African investment, and when, let's say, the panel sees commercial banks needing to come in. At what kind of scale, let's say, would they, and have we already seen that for renewables? What can we learn from renewables for things like hydrogen?
So just to clarify, do you mean international commercial banks or domestic?
Both. I did assume international, but it's actually an interesting question. Obviously, if there are homegrown banks would have the kind of capital. If you look to the projects, like one that is public in Namibia, I think it has 10 billion capex for one of the suggested projects for hydrogen, which, I would have question marks if local banking community is able to finance this. But so both. And probably I guess you would also consider what other agents should participate and in which way. But I hope this helps the question.
Letitia, I guess it's probably your direct market and competitors. I don't know if you want to.
You want to answer first, or no? You have something you want to say?
Well, I mean, off the top of my head, there's a sort of capacity angle, and then there's a sort of risk appetite angle, isn't there? And I think, it's gonna be relatively rare the projects in sub-Saharan Africa that can attract international commercial bank debt without some sort of risk mitigation, whether it be through an export credit agency or a DFI or a partial risk guarantee or some other instrument of that kind. So I think that's one of the constraints. As to what sort of ticket size they can do, I mean, I guess it depends on the bank and the sector and so on. But I mean, it's one of the challenges, isn't it? It's not a market where we're seeing tons of capacity for uncovered international commercial debt right now. I don't know if just maybe I'm looking at that too much through a lens of big scary mega projects, but perhaps.
No, I agree with you. And talking about the southern zone, it's really a local market in my understanding. Like, you have the South African banks that are very good and have the capacities to do the project. I mean, not the hydrogen you mentioned, for instance, but any other more common renewable energy projects. So depending on the zones, but I don't see international commercial banks coming on that area, while you have RMB or major banks like that in the zone that are just very good, very competitive, know the currency, and know the context.
Following the French developers, like banks like SocGen are almost kind of forced to come in, or like strongly advised? How does that relationship kind of work? Because I guess RN is now Total RN, but when they were RN more particularly, and it's a very iconic team as well, they kind of dragged around the French commercial banks quite successfully. Is this because of connections, because of political support?
I think it all just depends on the structure of the project, doesn't it? What I'm saying is commercial bank appetite for sort of project risk or local kind of credit risk and so on. A lot of get rid of that. A lot of those sorts of projects will benefit in one way or another from a sovereign guarantee or something along those lines. So there's obviously a different story. so I think it's hard to generalize without looking at the specific structure of projects.
Yeah, of course.
What I'm hearing from the panel, that without kind of state guarantees, it's not in the making. And the second thing I kind of heard is hydrogen is not yet where the renewables are. So
yeah. I mean, although we'll see. I think it's not obviously not in the same way, no, but there are beginnings of it, and I think some markets will drive that forward, and hopefully will the tide will lift all boats. Actually, you asked Olivia for us to think about a project that's our favorite project, and
Your
for me,
favorite
it's probably,
project, yeah.
probably an easy one in terms of ones we're doing right now, which is a project in Egypt that people may be familiar with, but which involves a sort of three parts really. There's a wind generation plant, a solar generation plant, and a electrolyzer plant. So the idea being to create new renewable capacity and therefore create green hydrogen, which will then be sold to for ammonia fertilizer, presumably for export or a mixture of domestic or regional and export. And I think that's a very that's a model that makes a lot of sense and may well end up being something that we see a lot of in the North of Africa, taking advantage of the natural resources that are there, and also the proximity to markets for ammonia and hydrogen. So I think that's one to watch. We're delighted to be involved in that one, and yeah, I hope there'll be lots of others like that.
And do you need anything? Because this is going to go viral all over the internet. So do you need any support, money, brain connection for that project that you want to call upon?
I'm not sure if it's my place. I'm just a lowly advisor, but obviously very happy to discuss with anybody who's interested.
Okay.
Please do, get in touch if you're interested in knowing more about that.
Sorry, just a quick question. So what kind of capacity is that project? Like 100 megawatt, 200 megawatt, or?
It is, I think gosh, I'm going to get this wrong now. I think the wind farm is 180 or 90 megawatt, and the solar, I can't remember, 100 megawatt, something like that. So it's in that sort of area. It's large, but
Okay, I just did my math, so it's definitely north of 3-digit million euro type of project.
Yes, correct. Good maths. But yeah, that's I think those sorts of projects will succeed. I mean, there's a and it's also interesting. You look at what's happening in Europe at the moment in terms of ESG regulation and the strictness of some of the rules about additionality and what can be classified as green and so forth, and that's not always straightforward, and perhaps in places that are developing that have more of the sort of blank canvas, there's scope for doing these sorts of projects where you've got interesting renewable projects that then have potential for spilled power at certain times of the day that then can be used efficiently for hydrogen production, where there's a market for that. And so I think that's all of that's interesting. We've been involved in another project as well in South America, with sort of similar principle, with this building renewables with a view to then using excess capacity to build hydrogen, which then has a local usage model there as well. So yeah, I think those sorts of things are a good start.
Fantastic. Othman, I will read your post, but in the meantime, I pass on to Laetitia to grill her on her favorite project for next year, for this year.
Yeah, it's at the frontier of what we call renewable, because I know that we talked about coal, but gas, I would say, is like the FIs, for instance, some of them say we don't do gas anymore, and some of them they do. We are currently raising debt for a gas to power project in the DRC. But it's not. I mean, it's quite a unique project. It has there is a similar project on the Rwandan side of the lake Kivu. So the idea is to take the methane gas from which is trapped in the deep waters of the lake, and to convert it into electricity for Goma region, which suffers from a real deficit in power capacity. It's a huge challenge in terms of technical issues and also the obviously the political context of the country. But if the project is financed in 2023, I'll be very happy for the developer and for the country too.
And this is where you're going to spend a lot of your year as well, yeah? Packing your suitcase. A lot of time on the ground and growing your team as well.
Yeah.
Wonderful. Well, I want to say thank you very much. I don't know if anybody else has a question. Erica, you wonderful. I think we'll connect everybody. So it's time to say thank you. Thank you to you both, Stefan and Laetitia. Laetitia, you jumped in a few days before the panel. So really a big thank you. Of course, Alassane, the one and only, amazing job. I think the last months for you has been very busy, but what you do is unique, very needed. You do it in a spirit that we love. So please continue, and we'll continue to support you and try to raise money to do this conference in Africa next time.
Thank you, I will do.
Brilliant.
Merci en tout cas, merci de votre connexion.
Yeah, and we'll share and spread and post. Yeah.
Okay.
Fantastic.
And if anyone wants to be connected with anybody, come to us, come to Alassane or myself, and then we'll make the introduction and the connections. It's all about getting to know each other, really.
Okay. Thank you.
Excellent. Thank you, everyone.
Thank you so much. Take care. Speak soon.
Bye.
Bye-bye.